Hey guys, welcome back to another week of Mortgage Matters in Minutes. Again, I'm your host, as always, Brent Rasmussen, owner of Mortgage Specialist. So today's question and topic is, what are prepaids and closing costs? And this is a very common question, as people are most interested in is, how much money do I need to purchase a home? Or how much is it going to cost me to refinance? And those are very important questions, because a lot of times when clients contact us, it's what is the down payment that's needed? And a lot of people throw out the word down payment, and that's a very common word. And when they're asking this question of what is the down payment needed, many times they want to know what all the monies that are needed and the dollar amount that is to buy a $200,000, $300,000, $400,000 home. And those can differ a little bit. And so that's why we're going to talk a little bit today about what are prepaids and what are closing costs. First of all, if you're talking with any lender, they're going to break down these prepaids and closing costs on a fees worksheet before you maybe have a home price or home address picked out, or on a loan estimate, or when you close, they're going to be on a closing disclosure. So while a lot of people talk about the word junk fees in the past, gone are the days of the junk fees. There's no longer a way to not disclose a cost to you, whether that's a prepaid, closing costs, or a down payment. And the government has set hundreds and thousands of pages of rules to disclose to you, the consumer, what you're going to be paying for. So as long as you are reviewing these yourself, you're going to be able to see specifically what those numbers are. But the challenge always is in talking with lender to lender, what makes those different and why they're different. So that's what we're going to shortly chat about here today, is first talking about what are prepaids. And prepaids are what the word says. We're prepaying for your property taxes and your house insurance before they come due. And why do lenders like you to prepay for taxes and your insurance? So that they know that they're paid, and there's not a reason for, if your house burnt to the ground, got hit by a tornado, they want to make sure that there's insurance there and not having insurance there. So they do make you prepay for your homeowner's insurance, generally a year in advance. And then also, lenders like to collect for your property taxes in advance. So when they come due here in Douglas and Sarpy County in Nebraska, they're due April 1st and August 1st. So they're not equally spaced out. So we have to put enough money in our escrow account, so that way when the county sends a statement to the lender, there's enough money for that lender to make that payment for you. Obviously, if you don't pay your property taxes, that can be a lien that can go ahead of your first mortgage. And after you don't pay those for a certain number of years, the individual can buy up those tax liens as an investment and possibly foreclose on you. So the lender doesn't want you or want to lose the property because of taxes not being paid. So they have you prepay those into an escrow account in advance. The issue with prepaids is the homeowner's insurance and taxes are different on every single property. So while we can estimate them very close before you find a property, there's no way for us to be exact on those numbers, because if the house is a certain area and we look at a house in a different area, taxes can be completely different and homeowner's insurance could be completely different depending on what we're looking at in regards to those taxes and insurance. So when it comes to doing a pre-approval, we're always going to estimate those numbers, and we have very good factors to cover enough for you. We like to estimate on the higher end side for the prepaids, because if we are quoting you a payment of $2,000 a month, we don't want you to come back and find out it's $2,200 or even $2,100. We'd like for those numbers to be more on the higher end side, but we still, as lenders, have to estimate that when you're looking to become pre-approved for a home, because unless you tell us, I want to buy 123 Main Street, there's no way for us to know exactly what the property taxes are. So prepaids can range. They can be as little as a couple $1,000s, or can go as high as $10,000, $20,000 if you're buying a more expensive property. Because generally speaking, we're going to put about 15 months of your insurance in at closing, and about 8 months of property taxes in at closing. So if you find out what the insurance and taxes are, you can do the very quick math to understand how much prepaids are going to run you. The other number gets a little bit more complicated in closing costs. And a lot of times people throw out the word closing costs, meaning they want to know how much money they need to bring into closing because they heard this word down payment or closing costs. They think those numbers are all inclusive, and they're not. Closing costs are very specific. They're items that are needed to obtain a mortgage loan. And some of the closing costs that could be needed are underwriting fees, appraisals, credit report fees, title insurance, title recording fees, endorsements off title insurance policies, surveys, and plot plans. Those are just some to give you an example. Lenders can charge additional processing fees, underwriting, commitment fees, things like that as well too. So the closing costs are going to be needed in order to grant the loan, and generally they're all third-party costs except for the underwriting fee, loan commitment fee, or processing fee that goes to the lender. And that would be in the section box A if you're looking at a loan estimate. Those fees are the only ones that go to a lender. So when a lot of people contact us and state, hey, what are your closing costs? $3,000, $2,000, whatever the number is, oh, you get all those fees. No, the lending institution doesn't receive those fees. Most of the time, I case talked about, those are third-party charges, which means that they are performed for services actually rendered. For an appraiser doing an appraisal, that's an actual service that's rendered. And there's tons of laws. RESPA law enacts most of it. TRID law and also Truth in Lending oversee these numbers to make sure lenders aren't charging too much, or they're also disclosing these closing costs accurately. Closing costs are going to be different whether we purchase a property or refinance a property, generally speaking. Not a lot different, but they're going to be a little bit different. And these closing costs is what generally a consumer wants to look around and shop for. And from lender to lender, they could deviate a little bit, but I would tell you, if you contact good lenders and you look at comparisons of apples to apples, generally speaking, most good lenders are going to be that same window of what those closing costs are. And generally speaking, you should be somewhere between $2,000 to $3,000 is a general rule of thumb right now for where closing costs should be. Each year, we run into more higher expenses with appraisals, with credit reports, with title insurance, so on and so forth. And those things could continue to keep rising. So as this video goes on and throughout time, that range might be closer to $2,500 to $3,500. But where we see sometimes it being a problem is when consumers contact us and say, I got quoted $5,000 for closing costs or $7,000 for closing costs. Sometimes those aren't closing costs and they just are using the word closing costs. Sometimes they are truly getting charged $7,000 in closing costs. And we would tell the average consumer that is too much to be paying unless you know you're buying down the interest rate. And this is what we see a lot when it comes to possible online lenders working with against or competing against someone like us. That's what we call ourselves, a local lender. We're in the Nebraska Omaha community here. And that online lender's goal sometimes is obviously to make you or show you the cheapest interest rate, because people think I always want the cheapest interest rate. But many a times they're just going to charge additional closing costs to get you that same interest rate. Can we do that as well? We sure can. But what we like to do here at Mortgage Specialists is review to see, does that cost you're paying, is it really worth it? Where's the market at currently? Where are rates going in the future? Does it make sense to pay that extra $2,000 or $3,000 in closing costs? Or does it not make sense? And we like to analyze those numbers financially to give you our best information versus just saying, hey, I can get you the cheapest rate, but you're going to end up paying for it at the end. Again, we talked about the closing costs and talked about fees worksheets. So the biggest and easiest way for you as a consumer to compare these prepaids and closing costs is to get a fees worksheet from a lender. Or if you have a purchase contract or a property narrowed down in a refinance, you can contact the lender and request for a loan estimate, which they have to provide within 3 business days of an application. And the government has a definition of an application, but you are able to itemize and review all these prepaids and closing costs. And what we struggle with clients is to remind them each and every day that not only do they have their down payment they need to worry about, but they're also responsible for the prepaids and the closing costs, which can add up to another $5,000, $10,000, $15,000, depending on how much taxes and insurance are, and depends on how much the property that they're looking to purchase. Whether they're buying a $50,000 property or a $500,000 property, the numbers could be a little bit different. Most closing costs are a flat fee. Whether you're buying a large loan amount or having a smaller loan amount, they can be the same. But some, like title insurance, differ by the amount your loan size is. While the closing costs and prepaids can get really convoluted and lots of numbers on a cost worksheet, going through them once or twice, it's not too daunting to understand. And this is how you'd be able to review and what to plan for accurately when you want to purchase a home. which I speak with clients regularly every day. They are asking, what's the minimum amount of money that I need to buy a home? Well, if it's a VA loan and it's a zero down payment, they think 0% is it, but they forget about the prepaids and closing costs. So again, today we just kind of give you a refresher of what those prepaids and closing costs are, why they're important. They need to be paid on all loans, and that is included in you purchasing a property. So you want to be able to have that money saved and set aside for that time comes. Again, if you have any additional questions about what's a prepaid, what's a closing cost, what does it mean to become pre-approved, we're here. A phone call at 402-991-5153, or you can jump on our website at mtg-specialist.com, where we have many blogs and videos to help educate you, or also subscribe to our new Mortgage Specialist YouTube page and follow along weekly with our Mortgage Matters in Minute videos to give you a quick highlight and an update of different terms and questions throughout the mortgage industry. We all hope you have a great rest of your day, and we'll see you here next time very soon. Thanks. Mortgage Specialists. Driven, trusted, reliable.